guys, welcome and welcome back to my channel. If you're new here, karibu sana, but if you're a returning subscriber, feel very much welcome. I know I've been on a little bit of a hiatus. Adulting, 1 star. I genuinely don't recommend. I'm kidding. Karibu sana, we are now back to business as usual. So I remember last time we talked about investing that was informed by the Maslow's hierarchy of needs, okay? And I remember we had already tackled the money markets investment, the money market funds, which I said are like the most basic form of investment that anyone who's looking to start the investment journey should be on, right? So now today, I want us to talk about special funds. I'm sure you've probably been hearing people talk about Mansa X or special funds, Kuza Momentum, and you're like, you don't even understand what all these things are. You probably heard of them when you're listening to advertisements on the radio, on the television, and you genuinely want to understand how they work because this year we must win in this financial journey, okay? So if you're that kind of a person, then this video is for you, all right? Stay tuned. Karibu. So basically, what are special funds? A special fund is a form of a unit trust. When you talk of a unit trust, it's basically a collective investment, right? It is very similar to what a money market fund is. When I say similar, this is what I mean. Whoever is the fund manager will collect money from different categories of people, okay? But the biggest difference is in where this money is invested, okay? If you have been attentive in this class, then you know we said that for money markets, the biggest chunk of your money is put in trust funds, right? And that is what makes it very low. I'm sorry. The biggest chunk of your money is put in treasury bills, okay? And that is why they are very low risk. The probability of losing your money is close to zero, okay? Because let's be honest, ever since we gained independence, the government of Kenya has never defaulted on any of its loans, investments, whatever you call it, yeah? So now, when we talk of special funds, the difference between a money market and a special fund is one, where the money is put, and two, the actual amount of money that you're required to put in, all right? So when you talk about special, why are they called special? One, they give you, diversity in terms of where your money is put, and two, they're for a particular category of people because the minimum amount of money that you can invest in a special fund is 100,000. But I know you, my people, are rich. I see you, people. I see you the way you roll on social media or even making silent moves. So I know this is for you, all right? So when you talk of special funds, one, they're governed by the Capital Markets Authority, okay? So like any company that purports to give a special fund, one, it has to be governed by Capital Markets Authority. Then remember the same way we talked about money market funds, having custodians, having trustees, the same principles apply. Okay, so now the biggest difference is in where your money is invested, how much you need to invest, the level of risk, and also remember, unlike money market funds where you can withdraw your money as and when you require it, for these particular ones, we do have a lock-in period. Okay, together until there? All right, perfect. So now let me talk about the three most popular special funds in Kenya right now. Number one most popular, which I know you've heard about and which has been longer than the others, is the Mansa X, all right? So Mansa X is run by the Standard Investment Bank and it was established in 2019. So for it, we can say it's been around, let's say long enough. So you can be able to look at how it's been performing. But let me give a little bit of a disclaimer. When it comes to special funds, just because it did really well last year does not necessarily mean it's going to do really well this year. Why? Remember I mentioned, unlike money market funds where the biggest chunk of your money is put in treasury bills, for the special funds, one, they want to give you a multi-asset diversification because that is how they are able to give you those returns of 20%, 40%. You know, when we talk about multi-assets, what do we mean? So number one, they can actually decide to invest in government bonds. And government bonds in this case do not necessarily mean Kenyan bonds. They can even invest in bonds for more sovereign countries. So nothing limits them from investing, for example, in the US. Nothing limits them from investing in Ghana, in Uganda, So one, they do invest in corporate bonds or rather government bonds. Number two, Some of them actually do invest in forex. By forex, I mean like they do take long and short positions. I'm not a forex guru. For that, you can always look for other people or other channels that talk about it. But yeah, some of them actually invest in forex, which is a very active trading. So that's how they're able to give you those big returns. Others will invest in assets such as gold. If you are actually interested in these things, you will see that gold has actually been doing really well for the past 1 year, coming down. They also invest in the stock markets in foreign countries that are actually doing really well. For example, they can decide to invest in shares in Apple, for example, or any other company that is doing very well in, let's say, the London Stock Exchange, So nothing stops them from doing that, all right? So that is how they're able to give you a return that is higher than the markets. So like when your money markets are average 11-12% per annum, these ones are able to give you 20, 30, because I remember like in 2024, Kuza had an annualized return of 45%, which was not very normal, but it all depends in where they put your money, okay? So again, if you want to understand whatever special fund you put your money in, what they invest in, like I said, you can always get the fund fact sheets. They're always online. And by online, I mean on the particular company's website. Okay? So get yourself informed. Sawa sawa? So we've already talked about where they invest their money. Now let's talk about the locking period. So when you put your money in these funds, for the three of them, that is Mansa X, Kuza, and Oak Special Fund, they have a locking period of 6 months. And I'm going to give a disclaimer. This is not where you put your money that is in an emergency, that you will need for an emergency. Remember we said the reason that money market funds exist is, first of all, they help you beat the rate of inflation, and two, they're a really good place for you to build your emergency fund. And we said, if you're employed, at any particular time, try to make sure that your emergency fund is somewhere between 3 months to 6 months worth of your expenses, okay? If you're not employed, it should even be bigger, because for you, the chances of getting money or getting another job might be, like the challenges are more on that front than for someone who's employed. So for this category of investment is not for your basic needs. Because for you to be able to get a good return, you should at least put in your money for between 1 year and 3 years. So this is not where you just jump in, my child is sick, God forbid, you want that money. No. That kind of money, we said you put it either in your money market funds or your fixed income funds, all right? Okay. So, we've already talked about where they invest their money. Number two, we've said they do have a locking period. And now let's talk about the minimum amount of investment. For Mansa X, the minimum amount that you can start with is 250K, 250,000 Kenya shillings. So you see, this is not for someone who's struggling with basic needs. But again, remember, I will always preach about money markets, and do you know why? Because if you want to grow your money, for example, to an extent that you now have the 250K that you can use to get into Mansa X, for example, you will need these things, right? You need to put it in a money market, because that way you're able to beat inflation, and when you finally have enough cash, you can transfer it to whatever special fund you decided, okay? All right, and then that is for Mansa X. For Kuza, this one at least has a lower level of entry. So that means, because with 100,000, you can easily join the fund. And then you can now top up 50K every other time that you want to top up. All right. So that is for Kuza. And then for Oak, this is for the Kidogo affluent, because for you to get into Oak, the minimum form of investment is 500,000. Okay. For Kuza, it was established in 2022, and then for the Oak Special Fund, it was established in 2024. But in my opinion, it really doesn't matter when something was established. Of course, I get you might have reservations of it hasn't been in the market long enough, you're not able to do the analysis. But I mean, at the end of the day, the choice is yours. I'm just saying, when it comes to such kind of things, nothing is a guarantee, and then the past is not always a prediction of the future. Good example. For Kuza, in 2024, they gave people returns of 45%, an annualized return. But when it came to 2025, it dropped to around 20%. So you see, really, the past in this case does not inform the future. Okay? All right. So I think we've covered, basically, because you've said, one, it is whenever you want to get into such a fund, ensure that number one, it is regulated by the CMA. So don't just get into someone, who tells you they're offering you this. Number two, make sure that you inform yourself in what that company is investing in. You can always call their numbers. You can always look at their fund fact sheets. All right. Number three is to know that you need to lock in your money for a particular period of time for you to be able to actually see the results. So, for example, if in 3 years' time you're planning to do something, something big, like maybe you want to start constructing your home. These are things that you can get into. Put in a good amount of money, of course, because remember, when we say the minimum is 100, doesn't mean that you can only put in 100. If you have 1,000,000, do it, yeah? And then the beauty of these things is, like I've said, they give you diversification, okay? So they don't take like your entire 250K and put it in Forex. It is at their discretion, but they can decide, 50% will go to a bond, 30% will go to Forex, 20% will go to shares. This way, like, you understand the principle of not putting all your eggs in one basket, yeah? So that way, you're able to diversify your investment, okay? One question that I've gotten a lot is, because of this higher element of risk, does it mean that you can lose all your money? If I'm being genuinely frank, the probability of that is very low, not unless your fund manager has a case of fraud. And why am I saying this? Because when something is regulated by the Capital Markets Authority, it's very difficult for them to just take your money and put it as and where they wish, okay? As much as they're given the discretion of deciding percentages, right? But there is a regulator, and remember, we have a custodian, we have a trustee. So the probability of you losing all your money, close to zero. Not unless there are fraudulent activities in there. The only risk comes in, for example, in 2024, the money markets were really doing well. Like, the rates had gone up to highs of 18, 16, 14. But then come to 2025, these things went really down. Of course, because the government is trying to regulate inflation, and this is an economics class, we could always go back to that. So sometimes you might find that your fund manager decided to put your money here, it didn't pan out as well as they expected, and that is why you lock in your money. You don't be a mutual panicky. Don't just panic all the time. This is why you put, money actually loves to feel safe. If I'm being honest, you can't have money and you're just panicking all the time. Panic, no. So this is money you put in. Wait for it. Kadili kataiban. Okay? So I genuinely hope that you have learned as much as you could have learned. If you have any questions, you can always ask them down below. I'm actually really happy some of you have been reaching to my inbox. It makes me feel so nice because it means you people are watching my content. I love you guys. Anyway, so stay tuned. Next time we're going to be talking about fixed income funds that I cut short last time. Okay? Until next time, bye.